Namaste and a very warm welcome to our channel Rusty Traders. In this video of ours, we are going to understand as to how can a trader time his entry and exit in the markets using Macd and Rsi. So let's start. So what are the basic checklists? So first of all, to execute this strategy, we have prepared some checklists which contains these points. First is that you need to have the RSI confirmation. Second is you need to have the MACD confirmation. Third is you have to identify the potential stop loss. The fourth is you have to determine the potential targets using the 50 DEMA pivots or the MACD and the RSI reversal points. And accordingly, you adjust your position size. So we'll understand that in detail as we go along. So now let us understand the whole process in a bit of detail. So when you want to execute this trading strategy, you have to wait for the confirmation from the RSI. So as we all know that the general levels of the RSI are 1730. If you want to know more about how to time the entry and exit using the RSI only, we have a video explicitly dedicated for that. So we would suggest that you have a look at it and then look at this video if it's possible for you. Similarly is the case for the MACD. So you wait for the confirmation from RSI in either direction, which is buy or sell. Once you get that, you wait for the confirmation on the MACD front also. Once you have confirmation on MAC and the RSI, then you adjust the stop loss. How do you decide the stop loss? If the MAC and the RSI have given you a sell signal, so you put your stop loss a few pips above the high of the trade that has been formed. So what I'm trying to tell you is that let's say at 10:30 a.m. the Nifty gave a sell on the RSI and MACD, and probably the high was made at 10 a.m. in the morning at the levels of, let's say, 17,500. So you put the stop loss at, let's say, 17,510 and you initiate a short. So what we are trying to tell you is how to adjust or how to understand or how to have a stop loss. So my stop loss would be a few pips above the high of the day. If I'm initiating a short trade, it would be a few pips below the low of the day in case I'm initiating a buy trade. How many pips you have, it is totally dependent on you as to what kind of risk management or what amount of hit you can take. So it varies from a trader to a trader. Once you have that in place, you determine the potential targets using the 50 DEMA, which is the exponential moving average. You can also make use of pivots or the levels of MACD and RSI, which are basically the reversal points. So using this, you can determine as to where you want to exit or where you can potentially exit. See, there are two different things. So one is that I want to make this much amount of money. Second thing is the market can only give me this much amount of money, right? So those two are very different. So always see what the market is trying to tell you. Do not see what you want. All right, and accordingly you take a trade. My risk, I take a trade wherein the risk reward is anywhere between 1:1, at least 1:1. So that's fine with me. Even if I even if I get 5 to 10 points for a particular trading strategy, if it is 1:1, I take that trade. So but then that's me. There are a lot of traders who do not take a trade unless and until they have a risk reward of more than 1:2 or 1:3. So it depends upon every trader. Once you have this process into place, then you initiate the trade and put the stop loss first and then the target. All right, so I guess this much is clear, right? Now in all our videos we give some theory front. On the front we try to develop some kind of base, but the total understanding is done using examples. So we have a lot of examples, and let us understand the strategy on the practical front. So now in these examples, I have given the live charts of Nifty, which are the 5-minute chart from 1st to the 9th September. All right, and we'll take all our time in trying to understand the strategy that we have explained. All right, so we'll go to the process step by step so that we are able to understand as to how can one execute this strategy. All right, so let's start. Now see, as we move along, if we see the RSI has given us sell confirmation first, fine. Have we got a confirmation from the MACD at this juncture? No. If you see, we got a MACD confirmation in the next 5 minutes. All right, so now you've got the RSI and the MACD confirmation, both of them in the same direction. And hence, what do you see? You initiate a trade explicitly in the coming candle. So it was a short was initiated here because both of them are sell signals. Now, how do you define a stop loss? My high was somewhere over here. So my stop loss is a few pips above. All right. So on that day, I initiated a short here because I got a confirmation of the RSI and MAC. My short or my stop loss was a few pips above the high of the day, somewhere over here, and my target was a 50-day MA. All right. So I sold it at around 17,186. My stop loss was 17,230, which was a few pips above the high of the day. And my target was 17,118 with a risk reward of what, 1:1. It's more than 1:1 actually. If you see, the stop loss is somewhere around 44 and my target is almost more than 100. So it was a relatively good trade and it worked out fantastically well. Now, what a lot of people ask me is as to why do I need to exit at 50 DEMA? Why not wait for a few more minutes, and probably I could have got out here. So see, there are a lot of traders who, depending upon the risk profile, decide as to where do they want to execute. Now I got out at the 50 DEMA. Now a lot of traders would get out when they get a reversal signal on MAC or the RSI. So if you see, they initiated a short here. Now they'll only exit when they get a buy here. Okay, on the MAC they got a reversal signal, which is the buy because you've initiated a sold sell. So this is the reversal for it. So they'll exit over here. Now MAC being a lagging indicator, sometimes it gives you the signals very late and it sometimes eats up a lot of profit of yours, and sometimes it works well also. So it's either way. So I prefer moving out at 50 DEMA if my risk reward criteria is fulfilled, or sometimes I wait for the pivots, sometimes I wait for CPR, but then it's very dynamic in nature. So you can choose whatever works for you, but you have to understand that if it is a trending day, you might not get an opportunity to exit also if your target potential is very far off. All right, this is something that happened on the 1st of September. Let us move along. Now this is for the 2nd September. Now if you see, again RSI we got a sell, RSI we got a sell again, but nothing was there on the MACD till that point in time. And after what, 12:30 we got a MACD confirmation. Now once I got the MACD confirmation here, at the immediate next candle I initiated a short because I've got sell signals on RSI and MAC. Once I did that, my stop loss was above the high of the day at that time. So this was the high and I put a stop loss a few pips above that. And I thought of exiting with a 1:1 risk reward because anyways it was looking like a trending day. And it was near the 50 DEMA. I did not wait for the 50 DEMA, somewhere along that lines. Now, if you see, the sell was initiated at 17,175 post MACD and RSI confirmation. The stop loss was 17,190. The target was 17,160. Now, if you see, if this is the hammer, which is showing a bullish sign, and if somebody knows the candlestick patterns, if somebody short, this is the time wherein one should probably exit their positions if they are short, because this shows that the bulls are in control. And hence obviously my risk reward was 1:1, which is only 15 points, but then it was worth exiting. So this is an example wherein if you overstay or welcome, your stop loss would have got hit, right? So either way, this is how I work. 1:1, good for me, I get out. Coming to the 3rd September, again a short trading setup. If you see RSI sell, if you see now, if you only get the RSI confirmation, you need not jump and take a trade. Okay, you have to wait for both the MAC and the RSI to confirm, right? Okay, so if you see, both of them are sell. Now you got a sell here, right? One of them is here, initiate a short here, as it has been mentioned, short entry here, and stop loss is above. My 50-day MA is here. So once I did that, so if you see, my sold was at 17,295, stop loss 17,350, which is a 20-point stop loss. and my potential target was around 55. So the risk reward was more than 1:2, which was good for me. Okay, now if you see, it still went down to around levels of 17, what, 215 to 20. So you could say that, okay, you could have waited for more time and made a profit of 20-25 rupees more, but then it's okay. I am fine with what I get. As far as this trading strategy is concerned, it works for me. 1:1, 1:2, 1.52 is great. And that is how I move along, and I get out. But the beauty over here is you get to understand, right? I hope you're getting this. How is the trading strategy getting executed? Right? We are seeing that we are getting sell signals, okay, and we are taking the trade in the same direction, which means we're taking a sell trade, keeping the stop loss a few pips above the high of the day, and accordingly we are setting the position size. Okay, so what are we trying to say is that in this example, let's say the stop loss is 315, you sold at 72.95, which means your potential loss is 20 points. Now let's say take an example of Nifty future up trade. The lot size of Nifty is 50. Okay, so if you are in this case, if you would have taken one trade or one lot of Nifty, it is 50 into 20, which is 1000. So if you are willing to take or able to take a hit of, let's say, 5000, you should not trade more than 5 lots of Nifty for this particular example. Okay, so probably not 5 in that sense, probably what, 5 to 250 into 20. Yeah, perfect, 5000. Yeah. So in this context, what we're trying to understand is, after doing all the analysis, you select your position size and then your target, right? So here it was a good trade, but then see, I would want a 1:4 risk reward ratio, but then that is not how it works, right? When I'm taking a trade, the market will show you simple moving averages, pivot levels. It will show you the 50 EMA also. So that's pretty much dynamic in nature. So at that day, at that point in time, whatever is the 50 EMA or the pivot, right, you have to take that into consideration and move out. Okay, another example for 6 September. Again, a short trade setup. Now, RSI, MAC, check, short initiated, stop loss above the high of the day, getting out at 50 DEMA. Perfect, right? So if you see here, the market never went below 50 DMA, right? Sometimes it goes, just because we are in a bullish trend, it's taking support at 50 DEMA and then, going sideways or moving up. In a bearish market, the conditions would be very different, right? But whatever it is, you have to understand that this is how a trade has to be taken. So here we sold at 17,400, and it's the other way around. The target was 17,348, and the stop loss was 17,431, and that is how the whole structure was established. A risk reward of more than 1:1.5 was there on the offing. So keeping all those things in mind, you have to understand this is the structure of the trading strategy. Moving on to the 7th of September. Now here we have got a long trade setup. If you see, RSI a buy, Macd a buy, and a long has been initiated, but now the stop loss would be below the low of the trade, low of the day, because we are taking a long trade, right? So this is the difference between sell and buy. When you're selling, the stop loss is a few pips above the high of the day, and when you are buying, it's a few pips below the low of the day. Now excuse me, now is it necessary always to keep it a few pips below the low of the day? No, you could even keep it 50, 100, 40 points below the low of the day, depending on whatever you feel comfortable. But then the risk reward will obviously get skewed in the favor of risk, and you will be like, my stop loss is 70 rupees, but then I'm only making 50 rupees, right? So it is totally dependent on you, just to be safe, whatever you feel comfortable. I keep it this way so that it's easy and pretty much covers my risk. Now coming back, this is the place where I initiated the long. This is my stop loss, and I got out over here. It did give me another 20-30 points, but then I was able to get out here. So you buy at 17,330, stop loss is 285, what is around 45 points, and you are making almost 90 points. So again, 1:2 at least. So sometimes what I do is, as soon as I hit 1:1, I close some partial positions of mine and then I move along. So this is how you can trade. So in a lot of situations, what people do is either they get out at some pivot levels, or what do they do is they wait for the Mac and the RSI to give them contradictory signals, and then they close their positions. Now these are people who are patient enough, or who have the risk taking capacity, and who are fine if things do not go their way, as they have big pockets. So if you are in those criteria, then yes, you can definitely wait for RSI and Mac to give contradictory signals and hold your positions at that point in time. I mean, it obviously does not work for me because it does not fit my risk profile. So there are different places where one can exit, but this is something that works for me. Coming to the 8th of September, similar scenario. If you can see, you got a RSI buy, nothing on the Mac. Again, RSI buy, whoa, you got a buy on the Mac. Great. Buy initiated, stop below the low of the trade, low of the day, and I got out at the 50 DMS, some of them, and the second was at the CPR level. So whatever is fine, right? So if you would have taken the demo, you would have got out at 323, waited for the CPR 17,362. So basically it's either way, but isn't it fantastic, right? If you see, it hits the demo, but then it hits the demo first before it hits the stop loss, right? So we are anyways able to make 1:1. Obviously this is, we have, I mean, this strategy we have come to conclusion after a lot of analysis and back testing, but again, this is not 100%. I mean, this does not work 100% always, right? A lot of trending days and things could go, of in a bad state in a very short span of time, and hence we tell people to keep stop losses, and accordingly they should keep their position size. No one should never get carried away. And this is what's happened on the 9th of September, which is the weekly options expiry before the Ganesh Chaturthi holiday. Same thing, right? RSI confirmation, MAC confirmation, long initiated. This is the stop loss, and this is the potential target. Now, something that beautiful was, there on the offering. If you see, the MAC gave a sell. Now, when did it give a sell? Somewhere here, right? You entered along here and it gave a sell here, right? So by the time MAC gives you a sell, you're already in the loss, right? And that is why we say that once it hits your 1:1, one is whatever is your potential risk reward, as you even it out, it is wise to move out. But then obviously, as our stop loss was below the low of the day, it never hit the stop loss, and it reached our target first. Now that is the beauty of this strategy. But as I'm saying, the markets are all about probability, okay? And this might not work at each and every point in time. If you are getting a trending day, you will get a lot of false signals on the RSI and MAC, and hence, if you ask me, you should use a 15-minute chart more, or you should trust a 15-minute chart more than a 5-minute chart on either, whatever you choose. I generally trade in Nifty, and hence I prefer a combination of 5 and 15-minute charts together. But sometimes there are a lot of false signals on the 5-minute charts, and if you don't know or have a vision of, okay, this might not be right, or this is something which is clearly false in nature, you might get stuck. So this is something that I wanted to share with everybody. I hope we have been able to express it in a very clear way. If this has worked out well for you, kindly share it with your friends. Do a lot of back testing for your sake before you initiate a trade. Always keep stop losses. And before we end this, we have tried to explain you both the scenarios, long and short. If you want to explicitly know how does a Mac work, we have a dedicated video wherein we have shown Macd and Macd histogram, and a dedicated video for RSI also. It's a tad lengthy, but if you're interested, you can definitely go through it. Again, we have explained it using examples so that we are able to convey it and people are able to understand it and implement it in a better way. On that note, I thank you for watching, and hope this video has uh, changed your way of looking at trading and has given a few insights into how you can use Mac and RSI in your trading journey. Uh, Always have stop losses and please respect them. What we mean to say is that, let's say you put a stop loss of 50 rupees and as soon as it comes near, you change it, and take it to 70. Do not do that. Discipline is the key in the stock markets. With everybody from Rusty Traders, we thank you for watching. Please share and subscribe. God bless you. Adios.